Folks, before we get into the nitty gritty of what happened in the markets today, I want you to take a minute and watch my 14-day breakout code workshop that I held live over the weekend. In there, I'll unpack the code, which has led to countless triple digit gains. Today, 4 more trades were signaled from the same code. Click the button below to watch my training first, and then come back and finish the rundown. Hey gang, it's Roger here. The market's going to close less than an hour, and I wanted to give you a little preview of what I'm seeing right now, everything I'm looking at, kind of the dynamics of the market action. So, don't expect a lot of news till the week progresses. Jobless claims is going to be a big factor, and employment situations. Jerome Powell speaking, it's not what he says, it's what he's implying. Always look to see if he's going to start talking about economy getting really, really bad. You know that means interest rates are going to be lowered again. That means bonds are going to go rise. If he's going to talk about economies turning around and it's beautiful and rosy and everything is just perfect, then expect bonds to go lower because interest rates will probably not go lower. They'll probably go higher, and bonds and interest rates are inverse to each other. Let's talk about stocks. S&P started the week higher. It's hovering around the 50-day moving average. It's not testing new highs. Earnings season starts in about 2-3 weeks with bank stocks. Not sure if the S&P is going to make another major upside. Depends on the tone. But here's what we got going on. I think we're going to see a lot of sideways trading action until we see China lift the small caps. But here's one thing that's bothering me, and that's the percentage of stocks in the S&P trading above the 50-day moving average. This is not based on market capitalization. This is based on percentage. You're looking at 5 years. Look at what happens most of the time. It goes above 69, 70th percentile. It comes down. It rarely goes above, as you could see here and here. Usually once it reaches 70, it starts coming down, and momentum went right almost at 70% just a little while ago. So it looks like momentum is coming down. Also, the S&P right now is grossly overbought in comparison to the broad market. The broad market, only about 50-55% of stocks are trading above the 50-day moving average, whereas the S&P 500, the number's close to 70. So there's a big disparity, and the broad market usually wins the war. But on the positive end of the range, Apple is coming out with earnings. They're coming out. Apple has the biggest market cap of any stock. So Apple earnings are very, very, very important. Now, here's some good news. They're expecting from a year ago downside of 2.41% from a year ago. The overall market, the overall stock market is expected from a year ago to be down about 4.5%. I don't remember if it's 4.3 or 4.7, but it's expected to be down 4.5, where the Apple's expected to be almost half that. That's positive. Also, most of the negative news on Apple's priced in, and as you could see here, let me show you the chart. Apple right now is trading near all-time highs. It's actually looking really good technically because it was basing out, it's picking up steam off of that 50-day moving average, as you can see here, and it's not overbought just yet. Now, Apple has major market cap, and if Apple starts breaking out, forget about it. This market's going to rise like a rocket. So, keep your eye on Apple for the next several days. It's going to have earnings, I believe, the 7th of October, which is exactly 7 days from now. Don't quote me on that. It may be a day or two earlier. But within the next 7 days, we're going to have Apple earnings, and that may be a huge catalyst for the market because because Apple has a huge cross-contamination, as I like to call it, with China. And if China isn't impacting Apple, a lot of parts are made in China, and so there's a lot of chip components made in China. And if Apple is shrugging off China, that means other tech companies are shrugging off China too, and that's going to lift the overall market and create major momentum. So keep your eye on Apple. The number it's expecting is lower, but almost twice as good as the overall market. Talk to you guys later. And again, keep your eye on Apple for the next few days. Take care. Hey, before you go, there's one more trade setup that I want to point out for you. Click the button below and I'll take you to my Momentum Breakout class. This is the class that I did live this weekend. I'll share a simple trick on how volatility and correlation can greatly increase your accuracy. And at the end, I'll be sharing a free, yes, free premium alert, both stock and the option. Tap the button for direct access to this exclusive event. Don't leave without doing it. Do it now.